Welcome back, everybody. In today's episode, we are talking about a very simple British business with unbelievable margins and returns on capital. And today, I'm not here by myself. I'm here with Sonny from Secret Sauce Investing on Substack. And today, we're going to talk about Games Workshop. Sonny, are you ready?
I'm ready.
All right, let's go. I mean, how cool is this? Until like a few weeks ago, we hadn't really met or talked, and now we're analyzing Games Workshop together. So thank you for taking the time and effort to do this with me, with the Dutch investors. That's very awesome.
No problem. Thank you for having me.
Before we dive into Games Workshop, could you briefly introduce yourself for those that don't know you yet? Who are you? Where are you from? And how did you get yourself into the world of investing?
So my name's Sonny. I obviously write Secret Sauce Investing on Substack. I have been writing about companies since 2021, but I have been investing since 2016. I'm based in Edinburgh in Scotland, so as a typical Scotsman, by day my work consists of whiskey, which is not a joke. That is what I work in. So investing for me is something that's more of a passion project rather than my day to day.
So you don't just drink the whiskey, you do something with the whiskey as well.
Absolutely. Whiskey has a lot of generates a lot of income for Scotland as well, and we have businesses like Diageo here.
Yeah, awesome. I believe our analyst Matthijs and Luke hold shares in Diageo as well. We did an analysis before. I'll make sure to share it with you after this episode. You might like it.
Thank you. Looking forward to it.
Yeah, awesome. Before I started doing research on the company, I had never heard of this business before. It came to my attention after reading one of your reports on the company, which I highly recommend people listening read it after this episode, after this podcast, because it was great. How did you come across Games Workshop, and why do you own the company? What do you like about it?
I've known about Games Workshop since I was younger because I used to collect the figurines and paint the models when I was about 10 years old. So I've always been aware of the company, and it's maybe always held a bit of a special place in my heart. But I wasn't aware until about 2017, 2018 that it was a listed company. So it was only after I started investing I was aware of this. So I've always kept an eye on it, but unfortunately, I did actually see the company when it was traded for about £5 a share. But then saw this huge incline on the share price. So I have kept an eye on it, and over time have obviously analysed it and sat on the sidelines until there was a bit of a pullback that gave me a chance to invest.
Yeah, that's talk about opportunity cost, huh?
Yeah, absolutely. But again, probably very new to investing at that point and a bit naive to understand what a great business it was when paying several times more for a share. But as you say, opportunity cost. We live and we learn.
Yeah, absolutely. You're right. Yeah, it's such an interesting company with a pretty cool history as well. We won't go too deep into the history or in this audio analysis, so I would recommend checking out our written report on that. But I will give a quick overview of Games Workshop. They were founded in 1975 in London by Stephen Jacks, John Peake, and Ian Livingstone. Initially, they started as a small mail order business, I believe, for board games and tabletop RPGs. They ran it from their bedroom, and over time, they evolved into the world's leading manufacturer of fantasy miniatures, known for its iconic Warhammer brand. I actually used to play a little bit of Warhammer on the PC. Well, not too much. I didn't really like it, but I can see why people like it. Could you explain what Games Workshop does in simple terms?
So, in the absolute simplest terms, I think you've already summarised it quite nicely. Is Games Workshop manufactures and produces miniature figurines that are part of a world that includes Warhammer 40,000 and allows customers to essentially buy these figurines and paint them at home and then play war games with them. And alongside that, there's been an entire world developed for Games Workshop that includes a lot of IP that we're starting to see rolled out.
Yeah, and I believe they have a pretty high customer lock-in with because they're so niche, and if you start playing the game and you start really getting good at it and you start liking it, players invest a lot of time and effort into the miniatures, painting, and strategy, perhaps even over the years. So it's quite an interesting and unique business. I would love to talk about how the company makes its money and dive a bit deeper into the business model. From doing my research, Games Workshop mostly generates money from third party sellers, so selling their intellectual property through bulk and wholesale with, like I said, third party retailers and distributors. I believe it's roughly 55% of revenue. They also generate roughly 20% of revenue through retail, so company operated stores, and the other 25% comes from online sales and licensing. So think of selling Warhammer art on, I don't know, Displayed or Warhammer plushies. They have close to 550 stores and expect to open 28 stores in 2025. And what I found pretty interesting is that 75% of all their stores are single staff stores, meaning just a single employee or manager. And 85% of all retail stores are located in the UK, North America, and Europe. So I believe those are the most important markets at this moment. Do you have a Games Workshop in Scotland?
We do, which is it's surprising to see. The trade side of the business is so high because in Scotland and in the UK, it's quite common to see Games Workshop stores. So I actually, before this podcast, before you asked me to come on, I was in the Games Workshop store about 2 months ago, and I hadn't been in a store for maybe over a decade. And it was interesting to just get a bit of a feel for the store. Previously, the store that was in Edinburgh, it was a bit dingy and needed maybe a refit. But they've got a new store in a new location, and it was busy. It was quite positive to see there was older parents possibly there with their children. So there was a real mix of ages.
You were just doing some real world research for your company, or was it for fun?
It was for fun. I think for me, game. I think you've already touched on it about customer lock-in, but there's almost a cathartic or an addictive side of Games Workshop that customers always want to purchase the next release. And I think you've summed up quite nicely with your breakdown of where a product is sold. And I think the fact that obviously I am such a large percentage, about 75%, are single staff. I think I've worked backwards and uh, worked out about it was about 216,000 generated revenue wise per store, which actually isn't a lot per store, but it just shows you how high the margins are for this product.
Yeah, I did some math on that as well. I believe it was around 216,000 per store on average. You're right, which only makes it more impressive. I believe they said in their most recent earnings call that I listened to that all stores were profitable, and if they're not, they're going to relocate it or close it. So they're pretty strict on that as well. Is there anything you would like to add on the business model?
No, I think we'll jump into it. There's been a lot of talk, obviously, about the breakdown, but I think we can almost cover parts of those segments by themselves a little bit as well.
Yeah, I agree. I agree. What do you think is their biggest strength and weakness if you look at their business model? What do you think are their strengths and weaknesses?
I think the strengths are the fact that they ultimately control the Games Workshop world. They control Warhammer 40k. They control Age of Sigmar. Yes, they license Lord of the Rings, but they ultimately dictate how this world is going to evolve. Um, so for me, that they can't be really compared to another seller or retailer because they are, yes, they're the retailer, but they're also the producer of the product, which again, you have this customer buy-in, you have this customer lock into the Games Workshop world and the franchises. And then beyond that, the fact that they are vertically integrated, so they are the manufacturer of all the products, which again they have full control over any of their manufacturing. And as we can see, and I'm sure we'll come on to in the margins, you can see with the products how profitable they are.
Yeah, I agree here. I mean, they have exceptional pricing power, right? I mean, we'll talk about the margins later, and the vertical integration is, I mean, gives them control over production, distribution, and retail, which is very important for this business. I do see some weaknesses, and you can either agree or disagree on them. I think they're, I mean, the business is almost entirely reliant on the success of a single brand, Warhammer. So customer backlash is a huge risk, which we'll probably talk about later as well. They're also, I mean, they do a lot of price hikes, and eventually this could cause problems. Eventually, I think even the diehard fans will give them some backlash. I guess. Would you agree or not?
Yeah, I would agree on both those points. I mean, again, the fact that they don't have essentially a direct competitor means that they can hike prices or continue to hike prices, but this will eventually frustrate customers. I would also advise as a weakness, there's a level of operational gearing with the business. So because of the setup, all of the increase in revenue has almost gone directly to the profits because of the fact that it is such a profitable product. But if Games Workshop revenue was to stall or decrease, they'd still have the same fixed costs. So that's potentially a risk. Um, in regards to my notes as well that I'd taken, there is an element of it being a hit driven business. They still have to entertain customers with new releases. Um, and then I think lastly, there's the risk that there's an aging population as well. This is a lot of people who have been collecting this for even since before I was collecting it 25 years ago. So so for a lot of these customers, at some point they will just come to a natural end of collecting. So they have to generate new customers from the children of these collectors or reach an entirely new generation.
Yeah. I mean, great points. One more thing before we can head over to the industry. Usually, and I found this pretty unique. Whenever we think about retail businesses, usually the goal is to sell as much as we can in the retail stores. And I mean, the goal for Games Workshop is not necessarily to sell anything in the store itself. It's more to like introduce people to the game, let them make their own character for free. I went to the Games Workshop up north. I believe there's two here. So I went to one of them, and they let me make their own character for free. They told me, they guided me around the store. They offered me all the support I wanted. There was only a single guy there. He was very friendly. He was very passionate about the game as well. And I felt like the goal wasn't really to sell anything. I didn't say I was looking for at it as like an investor. I just was really acting as like a customer. And I felt like the goal was more of to build like an intimate relationship with me, between the game, the brand, the community. And I mean, he did a great job. I wanted to try the game and buy something afterwards. So would you say that's true, or did he just not sell me enough?
No, well, first of all, as a shareholder, I'm delighted you've had a good experience or a positive experience because I do think there is a risk of if we consider these single staff stores, there is a risk if you have somebody who is a toxic gatekeeper or puts off new entrants or new customers, there's a risk they're missing out on a customer for life there. Um, I think Games Workshop for me
Yeah.
almost has the feel of a luxury business where somebody is buying into the brand rather than necessarily the product. It has almost a it's not this on the same level, but a Hermes type feel to the business, where customers just want to be part of the brand. They want to be in the store.
That's pretty crazy that you said this, because I was writing my article for the Games Workshop release, and I believe I said something very similar, where luxury brands charge like premium prices because customers feel such a strong emotional connection to the product. which is pretty nuts that you said that as well. I thought I was being creative, but you were you beat me to it. One more thing that I found very unique, and this comes back to your point, when I read the 2024 10K, the annual report, I read this from the CEO, Kevin Roundtree, and he said, ensuring we continue to recruit well, behavioral fit is more important than skills, which we can ultimately train, which is basically what you said. I mean, the managers, the single store staff has to be extremely passionate about the game and the skills we can train later, right?
Absolutely. And I think if we just reflect on a previous point that you've made as well, the aim of Games Workshop is not to sell as much product as possible. They want to be very operationally lean, and with that comes they want to effectively sell out of all the products they produce. They're not producing an excess of products. And again, we'll get onto the figures as to why they're such an efficient business, but that in part lends itself to why they have things like such a high ROCE. So yes, I think as a business, it's great to see they're doing so well in recruiting new customers, because I think that will lend itself well to the future.
Great points. I think this is clear for now. Could you expand a bit more on the industry Games Workshop operates in? Perhaps you could start explaining what the tabletop gaming market looks like. Is it big? Is it growing?
This is a hard question, because I feel that Games Workshop is almost completely on its own level. That competitor wise, and this is just from doing my research, we've got people like Mantic, so specifically Kings of War, Hawk War Games, and I think it's Mali Fox. I hadn't even heard of before. But with these companies, none of them are publicly traded. They're not mainstream. They're probably for specialists who are aware of these companies. And then beyond that, we have listed manufacturers such as Mattel, Tommy, Hasbro. But these manufacturers are predominantly focused on board games and mainstream toys rather than tabletop war games.
Yeah, when you think of like tabletop board games, you think of like Scrabble, Monopoly, perhaps even Risk. But when you go a little bit deeper, you realize that they are in their own little, you could even say like they're operating in a niche within a niche. I mean, it's so, there's so few people that they don't need to attract everybody, right? They just need the most passionate players that are completely, passionate about the ecosystem of Warhammer. And once you have like one of these customers, they are worth much more than just a regular board game player, right? Yeah, exactly. Yeah, I found a few interesting statistics that I found worth mentioning. The industry does seem to appear very like fragmented. Over 20,000 board game publishers are known to exist around the world as of 2020, so it might be more or less now. I mean, that's crazy if you think about it. And I also found it interesting that insiders expect the strategy and war game segment to hold close to 70% market share of global board games revenue, which is obviously a tailwind for Games Workshop, if that is true.
Yeah, I would agree. But again, it's so hard for me to decide or have input on the board game sector or the overall market, because as we've already touched on, Games Workshop was almost standalone.
Yeah, yeah, I agree. I came to the same conclusion. There is no real direct competitor at the same scale as Games Workshop. Perhaps there's like a very small publisher we don't even know of, perhaps. I think the closest alternatives would be War Machine, Bolt Action, Infinity, perhaps Star Wars Legion for those that are fans. And I guess the biggest indirect threat could be Dungeons and Dragons, which comes pretty close, I guess, to like popularity wise, but they don't have nearly the same pricing power. And I believe it's owned by Hasbro, and they've done pretty well so far. And I believe if you go back in history, Warhammer is sort of like based on the story of how Dungeons and Dragons started, but I might be wrong on that.
Yeah, I think as well the probably the competition for the future comes from the acquisition of new customers, and actually a lot of these customers could be lost to the likes of World of Warcraft or League of Legends, and it'll be interesting to see going forward how much Games Workshop intersects with the digital world rather than just purely remaining as a tabletop game.
Yes. Yeah, I think that's, I mean, the industry isn't stuck in the past, right? I mean, many of the biggest franchises, Dungeons and Dragons, Warhammer, Magic the Gathering, they are expanding into video games, mobile apps, pulling in new audiences, right? So we'll see in the opportunities chapter whether that's one of the opportunities we see as well. Let's head on over to my favorite chapter of this specific analysis, the competitive advantage, because I think this company, I'll give it away instantly, but this company has an exceptional competitive advantage. I mean, anyone could draw that conclusion just by looking at the return on capital employed or the margins they have. What do you think are Games Workshop's biggest moats or advantages?
I think first of all, they own the world and the IP that comes with it. That's not even just the characters or the board games. That's, as I mentioned earlier, the Black Library as well, and the narratives around that, and even the IP that will come into the licensing, that we've already seen a small part of released with the Secret Level episode with Amazon. So in regards to the IP, I think there's a huge competitive advantage there that the company is really yet to fully unlock.
Yeah, the intangibles are a huge part of their mode. Perhaps I would add that switching costs are pretty high for this company. I mean, once you're involved in this ecosystem and this storytelling, the amount of time and money you've spent on a game, perhaps you could expand on that a little bit, because you play or have played Warhammer quite a bit, you said. Do you think switching costs are a real thing for this company?
I don't know if I totally agree, because just purely based on the fact that I'm not, in regards to the game, I think there is absolute switching costs when it comes to people who start collecting. But I think with the game itself, there is an element of not just game players, but you might also have collectors, and the collectors can collect right across the field. So if we're looking at it purely based on an individual who's building their army, switching costs are absolutely there. But from a collector perspective, I suppose you could have individuals who collect right across the field. However, that's not to say that there is, as we've already talked about, there's too many competitors that these collectors can be buying from.
All right. I mean, we can agree to disagree here, right? I mean, you're the expert since you've played the game quite a lot and perhaps have a different perspective on it as well. Do you think any other company could replicate what they do and how they do it?
If we consider the fact that Games Workshop's a fully integrated manufacturer, they control all of the costs. That is part of the reason they have such high margins, is because everything is done in-house. There's very little overheads, and with that, they also now control the scale that comes with all of that. So even if you consider their molds, whether it be the resin molds or the plastic molds, these molds can produce hundreds of thousands of models and don't have to be replaced that often. In part of my research as well, I found that the molds can be adapted, so they can produce multiple variations of characters or miniatures with very similar types of mold.
In my written report, I said that Warhammer kind of has a Lego feel, where I don't mean like the items are the same, but I feel like if you're very into Lego, you're going to afford, you're going to be able to pay the extra. Um, you're going to pay the premium, right? What we said about luxury brands. And this company kind of has that same feeling, that if you love Lego, if you love Warhammer, it doesn't really matter if if it's $10, $20, or $30, you're going to pay it because you want it and want to use it.
Yeah, I would absolutely agree. Um, the final point I would just add, as a competitive advantage as well, is operational efficiency. And I think that ties back into the fact that they're very lean when it comes to the amount of releases they put out and how often they sell out when it comes to products. They've not just got a backlog of stock, and this sort of shift has happened over Kevin Roundtree's lifetime as CEO, and we're starting to see Games Workshop operate as a very efficient business.
All right. So just to draw a quick conclusion, Games Workshop seems very difficult to disrupt by any other company through a combination of very strong branding, deep customer investment, whether that's like time consuming or money wise, vertical integration, their intellectual property, and they have a very dedicated community. I mean, that creates a formidable competitive advantage that is very hard to disrupt, it sounds like.
Yeah, I would agree with all those points, and as an investor in a company, I'm quite happy for those to maintain, long into the future.
I mean, so many green flags. I'm looking for the orange and the red flags, but it's very difficult. But I do have a few things to say about the management. So I think perhaps we can do a quick little jump. You already mentioned the CEO, I believe. What can you tell us about the management team?
Uh, so the two standout individuals that for me are Kevin Roundtree, who's the CEO, and he has been the CEO since 2015. He's influenced a lot of the strategic decisions, and all you need to do is go back to 2015 and look at the revenue growth and the stagnation of the company. And you can now, obviously, he had the boost with COVID, which certainly helped with people being at home, but that growth has maintained and that efficiency has certainly maintained as well. So I think he's an absolutely excellent CEO.
Yeah, and just to add to your story of the CEO, I think he looks like a great CEO. He's been there for over 25 years already, so he knows the ins and out. When looking, I always look back into other annual reports. I love reading like from 2024 to say 2014, just to see what they're saying and what whether the tone changes. And I found this piece in the fiscal year 14-15 annual report. This was the year that Roundtree actually took over the day-to-day running of the company, and I found this quote from the previous CEO, and I just it's one of the best things I found. I highly recommend the people listening reading this on page 14 and 15 of our report. I'll make sure to share it with Sonny as well, so your readers can read this as well. And I quote, "The great master plan continues, cutting costs, becoming more efficient, providing excellent returns on capital. We do not set out to pay dividends. We set out to run an efficient company that uses money wisely. We are doing that well that when we have more money than we need, this becomes your dividend eventually. One bit of the great master plan remains stubbornly unrealized: sales growth." I mean, they said this in 2014, 2015, and they admit that revenue growth is lacking. And if you just go back to today and look over, at the past 10 years, I mean, revenue growth has been going at like 18% CAGR. So, I mean, it was just funny that I read this where they said revenue was stagnating, and 10 years later, it grew at an 18% CAGR. I mean, who would have thought, right?
And they certainly had the boost from COVID as well, which was a massive help because if you compare sort of pre-COVID and post-COVID, but what's been fascinating to watch is that growth has largely maintained as we've came out of lockdowns.
Yeah, COVID was a tailwind for them. I said that I found like it's not really a red flag, but it is a yellow flag. The low insider ownership of the company, it's not worrisome, but it does raise some question marks. There is no long-term incentive plan, for example. They don't. There is no long-term share awards program, which is pretty unusual for such a large company. And bonuses are entirely discretionary, so rather based on predefined performance targets. It's discretionary. It's not a red flag. It's a European country, so they're a bit more conservative compared to like U.S. companies. But I mean, I had to try and find something that I didn't like about the business. So if this was the only thing I could really find that I perhaps didn't like, and the low, they have a pretty low insider ownership, around 2 million and 500,000 pounds. So I mean, it's something. But it's just like 1.3 times base salary, or 3 times base salary, which is not per se a red flag, but it's not a lot if you ask me.
Yeah, I would agree. I think with Kevin Roundtree in particular, I think his share ownership is about 0.046% when I was doing my research of outstanding shares. And it was interesting because it wasn't until I was doing research for this podcast that I was fully aware that the share option scheme was so lacking for me. The I always thought Kevin Roundtree was actually selling his shares every year, but it turns out he's actually just not been rewarded with many shares, and his bonus is only based on as a cash bonus rather than share options.
Yeah, one could argue. I mean, that's the right thing to do for a company like this that is so like put all their effort into like intellectual property. So I don't really know what incentive you would choose if you had to pick an incentive for this company. We'll get to the KPIs later, but I don't think this is a red flag. It's just I'm just nitpicking, I guess. I'm just looking for something that I don't really like. Let's see if the competitive advantage and the management translates into good financials. Before jumping into the financials, I would like to remind you that listening to the financials is pretty difficult. So we will keep this to the point. If you want to truly understand the ins and out of this financial analysis, I would recommend you checking out the written report, or check out Sonny's Substack, Secret Sauce Investing, about the financials of Games Workshop. And this together contains all the necessary information, graphs, images, to fully comprehend the numbers behind Games Workshop. I already gave a little sneak peek on their exceptional returns on capital and margins. Could you tell us what investors really need to know about Games Workshop's financials?
So just over the top line, revenue recently is growing at about 10% per year. Gross profit for me is I've referred to it in my Substack 3 years ago, and I still think it's the same. Is like a software margin. It's about 70%, and operating profit sits around 35%. Games Workshop typically pays out about 75% of their income annually as dividends.
Yeah, that's a great overview. I believe operating margins have increased to around 41% by now, so that would make you excited as a shareholder, I suppose. I mean, this is software like profitability, which is incredible for a physical goods company. It's unbelievable. They have basically zero debt, a very strong balance sheet. I mean, what is there not to like about the financials, right?
Yeah, and I'm sure we'll come on to it, but the ROCE is unbelievable for what is effectively a manufacturing company, where that sits at in their most recent report. I read it at about 176%.
Yeah. Why is there ROCE so high? Do you think?
Effectively, this is a capital light business with incredible gross margins. So because there's so little debt as well, and the operating profit is so high, it just lends itself to this huge return on ROC.
Yeah, and they own the entire value chain, right? So there's no real reliance on third parties. They have a minimal reinvestment rate. They focus on profitability over aggressive expansion. So all of this combined gives them like this unbelievable 75% plus ROCE, which is unbelievable. It's very rare you see these returns on capital. Regarding capital allocation, they don't do any mergers or acquisitions that I'm aware of. They don't do any buybacks, which Makes sense, but we'll get to the valuation later. But I don't disagree there. They're not doing any buybacks at this current valuation. They focus on organic growth. Yeah, they have a pretty high dividend payout, so most of their capital allocation goes to dividends. Yeah, and reinvest selectively into retail expansion and licensing deals. So, since you're a shareholder, I'm very curious to know what KPIs do you track for Games Workshop?
So typically, I have tracked revenue growth. For me, gross margin as well is quite an important one. Um, and then largely operating margin if we consider those. Um, I would potentially like to see. I think the strategy has a finite life cycle for continually paying out dividends, and I'm curious at some point if that's going to come back to bite them for not retaining more capital or reinvesting in the business more, or alternatively even buying back shares.
Yeah, well, I mean, time will tell, right? Who knows? So far, they've been pretty successful, but it's a fine line they're walking on, right? So, I would add perhaps licensing revenue would be pretty well, not exceptional important, but fun to track because I think that's where a lot of growth can come from.
It's a point that reflects really positively on the management as well, is that I really enjoy reading Games Workshop's updates and annual releases because they are pretty straightforward and easy to understand. They're not trying to hide complexities. And I really enjoy the fact that they always separate out the licensing revenue. So they don't include this as core revenue. And I have no doubt that will increase going forward. But it's a green flag for me, the fact that management don't consider that as repeat revenue or recurring revenue.
I agree, absolutely agree. And perhaps, but it's a bit difficult to measure, I suppose. But I would say customer engagement is a very important KPI. I don't really know how you would track that, other than perhaps looking at the Warhammer Plus subscribers, the community activity, perhaps hearing from what players have to say on the company. But I mean, if customers become less engaged, that's going to be a huge problem for them, I suppose. And I believe they are also tracking, and with they I mean Games Workshop. They have their own KPIs. They also track the numbers of company-owned stores and the third-party retailers, how many they have like deals with. But I think that's the gist of it.
Yeah, and just a point on that as well is another KPI as well that's interesting is the number of stores they're opening. But they have stated in their annual reports that if stores stagnate or profitability declines, they will slow their store openings.
All right, great points. I think we touched on this a little bit, so we can keep this pretty short and brief. I would love to know your biggest threats for Games Workshop. I'll see whether I can add anything or agree or disagree anywhere.
So with Games Workshop, we're almost in uncharted territory when it comes to revenue growth because pre-COVID, we didn't have this ongoing revenue. Games Workshop had largely stagnated before Kevin Roundtree took over. With that as well, I think there's still an element of being a hit-driven business, despite it not being as obvious anymore. With the margins, as we've already touched on and keep referring to, they are so strong, but at some point is Games Workshop going to be guilty of price gouging customers? And then what's the backlash going to be with that? With the customers as well, the engagement is so important, and they need to ensure that, as we saw previous to Kevin Roundtree joining the business, the rules were overcomplicated. It was putting people off. Again, culture is very important, as we've touched on. If there's a toxic gatekeeper in this one person store, it could put off new customers from joining as well. Um, in regards to other risks for me, I think there's the fact as well we're seeing so much growth in trade, and Games Workshop has been such a strong business because they control so much of the stack. Whereas if the products are released more into the trade and there's more growth there, then suddenly you may have managers of stores or retailers who don't know as much about the product or aren't as knowledgeable And I think even if we make a comparison with Nike recently, we've seen Nike trying to bring sales back in house with a lot of their direct sales. So I think that is a potential risk that in pursuit of sales to um, push more into trade, they lose control of the brand, the customer, and the engagement. Um, I think in regards to my last point as well for risks is if IP is poorly managed, all you need to do is you need to go through Metacritic and look at the games that have been released with Games Workshop titles or Warhammer, and they're largely poorly reviewed. The fact that I think it's about 70% of their licensing revenue comes from games or from like PC and computer games shows that that's a really important part. And I think fortunately, Space Marine 2 came out not too long ago and has been largely positively received, but that is not always a guarantee if they're not in control of the IP, and it could leave a bitter taste in customers' mouths.
Purely out of curiosity, do you think Games Workshop could ever diversify into other intellectual property?
That's a very difficult one, and I think it's interesting because they control so much of the stack, but at the same time they obviously recognise there's certain areas they're not the experts in when it comes to how they license their IP. However, as we have seen, they have Warhammer Plus, the model that generates about £5.99 or £5.99 here in the UK for a customer, and I think correct me if I'm wrong, there was about 176,000 annual subscribers or subscribers. So they are expanding into different segments of digital. So I don't know if they'll necessarily move in completely different areas, but they are obviously testing that, and it seems to be working.
I mean, there's not much I can add here. I would absolutely agree. I think the absolute biggest risk is the fact that they have no. I mean, it's the over reliance on Warhammer. It's the biggest opportunity. It's the biggest risk at the same time. What do you think of 3D printing? Would you say perhaps that is a like a risk?
It's funny because in preparation for this podcast, I looked into that, and it's not something I ever considered. For me, I think in the UK, especially where we have maybe so many Warhammer stores, it's almost like comparing, again, if we move back to the luxury handbag sector, if you have a luxury handbag versus a counterfeit luxury handbag, even if to the person on the street who, maybe it looks similar, you will still know the difference. And for me, I don't feel that we'll ever reach that point where, well, first of all, 3D printers are necessarily mainstream, and then off the back of that, there's a massive risk. I think where the risk with 3D printing actually comes in is probably through counterfeiting. And especially that comes back to the point we made about a lot more reliant on trade. So if trade customers are buying counterfeits and then selling them and trying to pass them off as Games Workshop products, that's certainly a risk.
Yeah, it was a bit of a rhetorical question. I knew you were going to say this. I would make the comparison to Lego again, right? I mean, if you're a Lego fan, you're not going to 3D print Legos just to make a cheap version of, I don't know, the Eiffel Tower, right? I mean, you're a fan of Lego, you're a fan of Warhammer, you're just going to buy the real brand.
So I think my last point as well that is a risk is we have seen how strong a manager Kevin Roundtree has been and how strong a CEO he's been for the company. Um, I think because the company generates such a high level of income and has stuck to that same strategy of paying out income as dividends, I'd be curious if there was a new CEO brought in and they decided to change that strategy, would it be for better or for worse?
Yeah, I don't know. Great question. It's something to keep track of if you're a shareholder, if he ever decides to leave, right? I haven't really read anywhere he's going to leave anytime soon, but that's definitely a long-term risk. Would you kindly expand on some of the opportunities for Games Workshop?
I think the opportunities are again based around the IP. Have you watched Secret Level on Amazon Prime?
I have not yet. No.
So these are just like short stories by anyone who's watched Love, Death and Robots on Netflix. It's by the same creators.
Yes.
And I watched it without even knowing that there was any reference to Games Workshop or Warhammer 40,000 in the in the series, so I was quite positively surprised. But it was nice to see that. I suppose that's the first piece of the unlock with Amazon and the partnership that has came about previously. So for me, I think the opportunities lie around the unlock of the IP, the fact that obviously Henry Cavill, Superman, he has obviously he's a big fan of Games Workshop, and he seems to have some involvement in this reported cinematic universe, which is going to have a TV series around Warhammer 40k as well. So I think one of the risks we talked about was potentially struggling to replace or older customers and struggling to replace them with new customers. But actually, if we can access them through media through Amazon Prime, then that's a huge opportunity.
You know what I found difficult about this company was estimating or calculating where the limits are for this business. Can they still grow in Europe? The answer is probably yes. They can still grow a lot in Latin America and Asia, since that's like a tiny part of their revenue. But at what point does opening more stores not really contribute to getting new fans, customers? I found that very difficult. So I do think the digital expansion, like you said, into games, into movies, perhaps some subscriptions, is a huge like tailwind or some opportunity rather. But I found the estimating where the limits are for this company to be very difficult. I mean, is there anything you can tell about us about that, or have you ever thought about it?
I would just say I probably agree that because Asia in particular looks to be a huge opportunity, but just purely because the company does not sell there, but actually the culture can be quite different in Asia, and it's not just guarantee that there's an opportunity to open more stores or to sell more product. Um, However, I do think there is still the opportunity to scale up when it comes to production, but at what point again do they lose control of either production facilities, or does it then have to is there a new facility created out in Asia? And again, that's a bit of loss of control because things have been done for so long in the UK. And then, is there a risk of counterfeiting, as we've already talked about?
All right. Yes, I think that tops up risks and opportunities. I don't really have anything to add here. I think you mentioned the most important ones on risks and opportunities. Let's head on over to like the valuation. The PE seems to be historically high, but it has come down a little bit from post-COVID. I mean, the market recognizes the quality, right? I mean, the pricing power and profitability. I found it very difficult to value this company since, I mean, how much more can they squeeze out margin-wise? At what point do they decide that they have to perhaps lower prices to get more new customers, or not to lose any current fans or customers? So I kind of left things at what they are right now, where they don't really squeeze out any more profits, but they don't really lower prices either. I do think they still can grow revenue, since there is a few tailwinds they operate. They still have quite the growth path. Yeah, I started at like 10% revenue growth and then dropped it down to 8 and then to 6 over time. I used the 10-year scenario analysis we use for the Dutch investors just to get a rough idea of the value. I kept the margins the same, and I arrived at a IRR between 7 and 10%, which is, I guess, reasonable, but I don't know. What do you think of the valuation?
So for my valuation, I also went for a 10% IRR, but I was maybe more generous and left it at 10%. And with that, for me, in my DCF calculation as well, I had the valuation sitting at around about £120 a share, which were slightly above that just now, but that it seems reasonable. I don't think it's necessarily aggressively overvalued, but for me, if I was to buy more shares in Games Workshop, I'd certainly be waiting for a pullback down to possibly about £70 a share.
Absolutely agree. That's basically the same I said as well in my report. it seems very simple, very easy to understand. I feel like it's within my circle of competence. I feel like I can keep track of this company. There's a lot of things to like about this business. I mean, there's still a lot of growth. Yeah, it's difficult to say. What would make you sell Games Workshop aside from valuation?
Um, I think for me, with Games Workshop, it's tricky. I think if there was a stagnation in revenues, or a real loss in gross margin, I'd be quite concerned. Beyond that, it would be things like fan engagement. If there was a real pushback or backlash, from fans, and obviously if there was a deterioration in the culture around the company as well. And then lastly, because he's sort of such a linchpin, if Kevin Roundtree did leave, I would keep quite a close eye on who his replacement was and what style they plan to implement for the company.
Awesome. Thank you for sharing that. I think I agree on all your points there. Is there anything, any closing thoughts on Games Workshop? Because I think this was a great analysis, but perhaps you have any closing thoughts?
Um, I just think it's probably points we've already touched on, is that they're a fascinating business because they own the IP of a world that they've created. They vertically manufacture all of the goods. They have software style margins, and again, touching or reflecting back on the annual reports, there's a bit of a no nonsense style about how they present to investors and shareholders. As a company, I know they hold their IP in quite high regard, but I also, as a shareholder, I'm an owner of Disney and Nintendo, and I think Games Workshop falls into a similar bucket. It'll be very interesting in regards to how the Amazon partnership plays out, because it's such a unique business, and I'll be keeping a close eye on that. I'd certainly recommend that anyone who's listening to this podcast, um, or yourself, watches Secret Level, and it's only 15 minutes, and it's quite an entertaining 15 minutes for a nice point of Warhammer 40k.
I would like to thank you so much for sharing your thoughts and information on Games Workshop. I would highly recommend our listeners to subscribe to Secret Sauce Investing over on Substack. Is there anywhere else they can find you, or is it mostly Substack?
Mostly Substack. I think my intention, based on all the research and notes I've pulled together, would also be to put out a bit of an update on Games Workshop in the sort of coming weeks or month.
I'm looking forward to that. I would love to get you on the podcast again sometime. Perhaps we can analyze a new business together, or we can choose one of the businesses from your portfolio. Again, we'll see. We'll see. Thank you again for being here, sharing your thoughts, and we'll talk later again.
Great. Thank you very much for having me.
Absolutely. Thank you so much.